What if I told you that after working your entire life, saving money, buying a home, building retirement accounts, and trying to create security for your family, one missing document could create chaos after you're gone? Not because your family did not love you, not because you failed, but because there was no plan. Welcome back. My name is Alfonso with Money Smart Basics, and today we're talking about something many people avoid: estate planning. Now, before you click away, thinking this only matters for millionaires, let me say this clearly. Estate planning is not just for rich people. It is for homeowners, retirees, parents, grandparents, business owners, and everyday families. If you have a bank account, a vehicle, retirement savings, life insurance, or a home, you already have an estate. And the question becomes, what happens to everything you built if something happens to you? Today, we're going to break this down simple. No complicated legal language, no confusing attorney talk, just practical information that could help protect your family, your assets, and your legacy. Because retirement is not only about building wealth, it is also about protecting it. And many retirees spend decades focusing on accumulation, but very little time focusing on transfer. And that mistake can cost families thousands, sometimes tens of thousands, sometimes relationships. So today, we're going to talk about wills, trusts, probate, power of attorney, healthcare directives, beneficiaries, protecting real estate, and why estate planning matters more as you get older. And trust me, this conversation is more important than most people realize. What is estate planning really? Let's start simple. What is estate planning? Estate planning is creating a plan for what happens to your money, your property, your healthcare decisions, and your assets. If you become sick, disabled, or pass away, that's it. Simple. Now, many people hear estate planning and immediately picture mansions, wealthy families, celebrities, billionaires. But estate planning is really about organization and protection. It answers questions like, who gets the house? Who handles the bills? Who makes medical decisions? Who receives the retirement accounts? What happens if you become incapacitated? What happens if there is no will? And here is the reality. If you do not make decisions now, the courts may end up making them later. And that process can become expensive, slow, and stressful for families already grieving, especially during retirement, because by retirement age, most people have accumulated more assets than they realize. Things like pensions, social security income, investment accounts, paid-off homes, insurance policies, savings accounts, vehicles, family heirlooms. And without planning, even simple situations can become complicated. That is why retirement is one of the most important seasons to review your estate plan. The probate problem. 5 minutes. Now, let's talk about something many people never hear about until it is too late: probate. Probate is the legal process the courts use to distribute assets after someone dies. Now, hear me carefully. Probate is not always evil, but it can become time-consuming, expensive, public, and emotionally draining. Some families wait months, sometimes years, trying to settle estates. And during that time, assets can become frozen. Bills still need to be paid. Mortgage payments continue. Property taxes continue. Family tension grows. And sadly, money problems after death can divide families. I have seen families stop speaking to each other, fight over homes, fight over bank accounts, fight over personal items, not because they were bad people, but because there was no clear plan. Now imagine this. A parent passes away without a will. The children assume everything will automatically work itself out. But then, the house is tied up in probate, accounts are frozen, paperwork is missing, family members disagree, attorney fees start growing, and suddenly, what should have been a smooth transition turns into confusion and stress. This is why planning matters, not because we like thinking about death, but because we love the people we leave behind. Estate planning is not really about death. It is about protecting your family from unnecessary burdens. That is a major mindset shift. Why retirees must pay attention. Now, let's talk specifically about retirees. Why is estate planning especially important during retirement? Because retirement changes everything. As we age, health risks increase. Cognitive decline becomes possible. Medical decisions become more important. Asset protection matters more, and family responsibilities shift. Many retirees also become caregivers, or eventually need caregiving themselves. And if there is no legal preparation, families can face serious problems. Imagine becoming temporarily incapacitated. Who can pay your bills, access accounts, make medical decisions, handle insurance matters? Without proper documents, even spouses can face complications. And many retirees assume, my family already knows what I want. But knowing and legally having authority are two different things. That is why documents matter, not just conversations. And retirement is often the perfect time to review beneficiaries, wills, trusts, healthcare directives, and power of attorney arrangements. Because your financial picture changes during retirement, your goals change, and your priorities shift from accumulation to preservation and transfer. The key documents you should know. Let's break down some of the most important estate planning tools. A will. A will explains who receives your assets, who handles your estate guardianship wishes, final instructions. A will is foundational, but many people do not realize. A will alone may still go through probate. That surprises many families. A trust. Now this is where many retirees begin paying closer attention. A trust can help organize assets, avoid probate in some situations, provide privacy, simplify transitions. And depending on the setup, trusts may help with real estate transfer, protecting beneficiaries, multi-generational planning, especially for people with property, blended families, multiple children, rental real estate, or larger estates. Power of attorney. This allows someone to handle financial matters if you cannot. That means paying bills, handling banking, managing financial issues. Without it, families may need court involvement. Healthcare directive. This explains your medical wishes. And who can make healthcare decisions if you cannot speak for yourself? These conversations are difficult, but avoiding them does not make the risks disappear. Planning creates clarity. Real estate, retirement, and legacy. Now let's talk about real estate. Because many retirees built wealth through home ownership, and sometimes the family home becomes the largest asset in the estate. But here is the problem. Without planning, that home can become delayed in probate, disputed by heirs, financially difficult to maintain, or even forced into sale, especially if multiple children inherit the property together. Now emotions enter the picture. One sibling wants to sell, another wants to keep it, another cannot afford repairs, another lives out of state, and suddenly a blessing becomes stress. This is why proper planning matters, because estate planning is not only about passing assets, it is about creating instructions and clarity. That can reduce confusion later. And for retirees, this becomes part of protecting generational wealth, especially in communities where homeownership took decades to build. Wealth transfer historically faced challenges, and financial education was limited. Biblical plus legacy perspective. From a biblical perspective, planning matters too. The Bible says, "A good man leaves an inheritance to his children's children." That is bigger than money. Inheritance can include wisdom, organization, protection, preparation, and stewardship. Estate planning is stewardship. It says, I care enough about my family to prepare. And preparation is wisdom, not fear. Some people avoid estate planning because they feel uncomfortable, they think they have time, or they think they do not have enough assets. But estate planning is not about predicting the future. It is about being responsible with what God allowed you to build. Final call to action. So let me leave you with this. Retirement is not only about saving money, reducing debt, or increasing income. It is also about preparing wisely. because one day someone may have to handle your finances, your healthcare decisions, your property, and your legacy. And the question becomes, will they face confusion or clarity, stress or preparation? Estate planning may not be the most exciting conversation, but it may become one of the most important, because protecting your family matters. Protecting what you built matters, and protecting your legacy matters. If today's video helped you, go ahead and hit the like button, subscribe to the channel, and share this with someone approaching retirement, because too many families are unprepared, not because they did not care, but because nobody ever explained this simple. And remember this, building wealth is important, but protecting it may matter even more. I'll see you in the next video. You worked too hard to leave your family confused, stressed, and unprotected. Too many families lose wealth, get stuck in probate, or end up fighting over assets simply because there was no plan in place. Hi, I'm Alfonso, and we help families put important protections in place, like wills, trusts, and power of attorney documents. Because real financial literacy is not just about making money, it's about protecting what you build. Click the link in the description and take the first step toward protecting your legacy today. The information provided in this content is for educational and informational purposes only and should not be considered financial, legal, or tax advice. Always consult with a qualified financial advisor, tax professional, or legal counsel before making any financial decisions. The creator of this content is not responsible for any actions taken based on the information provided. Investments and financial decisions carry risk, and past performance does not guarantee future results.